Good evening, everybody, and welcome back to the Illinois Green Party series. I'm your host, David Rych, with my co-host, Calvin Tomaschko. Calvin, how are you?
I'm doing great. So happy and excited to be here. Let's do it.
Yeah, this is going to be a cool one for sure. We have our guest tonight is Erin Gray from Green Century Funds, which is essentially, I'll let her elaborate obviously more so on this, but essentially it's an investment organization concerning investing your money in green industry. So that it has a moral, a valuable value underpinning to it besides just making lots of money. Then hopefully you could do that too. Maybe if that's your goal in life. So anyway, Erin, let's get right to it because I know there's a lot to discuss. Why don't you go ahead and tell us a little bit about the history of it, what got it started?
Sure. So just a description of our firm, we describe ourselves as the first family of broadly diversified, but also still responsibly screened and fossil fuel free mutual funds in the country. And our whole mission is just to provide positive environmental impact through investments.
That's awesome.
And yeah, it's been really fun to work here. We have a few ways that we kind of go about enacting our mission. The first is just through our sustainable investment portfolios that we offer through our 3 mutual funds. And the aim here is to invest in environmentally sustainable leaders, kind of best-in-class companies across a variety of industries, avoid the worst industries, which include fossil fuels, but also things like tobacco and weapons. And then another part of our strategy is what we call our shareholder advocacy and engagement program. And this is where we work with companies to improve their environmental performance. And then the last part of our impact is just through our unique ownership structure. We were founded back in 1991. So excited to be celebrating our 30th anniversary this year.
Oh, yeah, that's right.
And we're founded by nonprofit environmental and public health organizations, which is pretty unique for the financial services sector.
Taking the word profit out of environment or just investment, anything is like almost sounds like an oxymoron.
Exactly.
So yeah, when I read that on your website, I was like, well, hold on a second.
We are still a for-profit entity, just entirely owned by nonprofits. So we're trying to do as good as we can so that they can do, even better things with all their cool campaigns.
Well, that's an interesting dynamic, actually. That's I wonder if that hybrid would work well in other areas. Calvin, did you want to start us off here with any questions for her?
Yeah, got to break it down to basics. I'm going to say I'm not very financially literate. Can you tell us about that first section that you talked about? What is mutual funds even? And I guess for even me, what exactly, if I walk up to a mutual funds business or building or financial group, what am I doing when I arrive there? What happens to the money that I place there for, I assume, for retirement or for other saving reasons?
Yeah, definitely. So, I think what a lot of people think of as investing is just literally buying the stocks of a particular company. So, you might go out and buy Apple stock or Alphabet, the parent company of Google, or, Ford Motor Company. You can buy the stocks of individual companies. But what a mutual fund does is allow a group of investors to come together and pool their money. And then you get a professional portfolio manager does the day-to-day investing. So they buy and they sell the stocks in accordance with a certain investment objective for that particular mutual fund. So going into it, kind of what you're investing in. And the idea is you collectively buy stocks at a certain price and hopefully those grow over time. And that's how you get a percentage increase or return. So they talk about how's your fund performing, and that's what you want to see. It'll come in a percentage format. And there's mutual funds of all types. There's something, like very broad-based indexes, which is what Green Century offers. We try to be kind of core investment options for investors. If they just hold a few funds, ours might be appropriate for them. For instance, we have what's called an all equity domestic index. And what you can do is kind of look at what the benchmark is. So each fund will have kind of a comparison. So you kind of know what type of investing you're getting. And our comparison or benchmark for our Green Century Equity Fund is the S&P 500. And so that's investing in the 500 largest companies in the US stock market. We also have an international index that just invests in companies outside of the US. And then there's also one called a balance fund, which invests not only in stocks, but also in bonds. And stocks are a security that companies issue to raise money. And bonds are essentially loans or debt that a company uses as a different vehicle to raise money. And then there can also be kind of, I've mentioned broad-based indexes. There can also be more narrow funds, ones that might have like a real estate focus or a technology focus. And one of the things that we always encourage investors to do is look at a prospectus, which is a regulatory document. It's probably among the driest reading you'll ever find, but it has important information like what's the investment objective and how is it going to be managed, so that you kind of know. And the marketing and description of funds can be all over the place. And a real estate fund or a technology fund could say, oh, we're fossil fuel free. But by design, they never intended to invest in fossil fuels in the first place. So, just kind of scratch the surface, look under the hood, to see what's there.
It's like people selling, advertising vodka as carbohydrate free. All vodka is carbohydrate free. So no carbs.
Free.
Nice. That's really interesting. Okay, so like let me ask you something a little more concerning the current climate in America and going back a little ways with all the protests and everything else. You're an investment firm, obviously. And what happened during Occupy Wall Street? Did any of you guys get hit by that at all? Did it affect you at all?
I wouldn't say significantly, but I would say that it's continuing to raise the awareness of ways that investors can bring their values to their investments and better align their portfolios with how they lead the rest of their lives. Literally the concept for Green Century came out of the 1990 Earth Day event that was really focused on, kind of individual action and ways that people can just take steps to be greener. These nonprofit groups, state-based around the country, realized they had, a few 100,000 members across the country who cared about social and environmental issues, but there weren't that many ways to invest that aligned with those values. So, I would say things like Occupy Wall Street were just saying the financial system is messed up. Yeah. Like we need to pay attention. People need to know what they own. That can be really difficult to do, but it's just hopefully giving people awareness that there are something, there's all different types of names for kind of what we do: socially responsible, socially conscious, green investing, ethical investing. There's now a term called ESG for environmental, social, and governance factors. So, it's hard for people to figure out this alphabet soup, but working with a financial advisor, they can really help kind of cut through the whole universe of, 8,000, 10,000, however many mutual funds are out there to say, based on your investment risk profile, your return timeline, these are a few that might be appropriate for you. So I feel like these movements, including more recently last year, just highlighting diversity, equity, inclusion issues at corporations, management, staff level, board level. All of these are just being brought to companies, and investors can play a big role in raising a lot of these issues as well.
All right, very cool. Calvin?
Yeah, I'd like to dive into the ESG a little bit, but I want to preface this with I guess a notion that this is not exactly the same as trying to push for better democratic systems. Democratic systems are based off of one person, one vote. where, you know, it's supposed to be egalitarian. Everybody has the same power. And it's, I guess in a way it might be frustrating for some people to hear. It's personally frustrating for me that democracy isn't as strong as it could be. And we're not seeing like the participation in just electoralism equating into a better society with a lot more benefits. So what we're looking at here is not a system of one person, one vote, but more of a system of $1, one vote, if you will. And there's power in that system only when we all combine our efforts and essentially pool capital and then use that capital to lean against other companies. And we'll talk about that more with the advocacy. But all along the way, this company or this investment firm, has found a way to support companies ethically. And we're using this score primarily, or at least that's what I saw on your website and in a few videos featuring Green Century. And that's environmental, social, and governance. And I hope our audience, it's definitely alphabet soup at times. I love that phrase. But could you go into each column for us and kind of explain maybe like one or two instances within them and how a score comes about and how prevalent is this scoring system used like throughout banking and financing?
Yeah. So I can certainly do that. And a firm like ours, you know, as I mentioned, it's important to kind of understand what angle an investment portfolio or a particular mutual fund is kind of oriented towards. So at Green Century, I kind of describe us as capital E in thinking about E, S, and G issues. All three of our mutual funds, the companies that we look at in a wide universe have to have minimum scores and meet certain criteria in order on all three factors, environmental, social, and governance, to even be eligible for inclusion for possible investment in the portfolios. But in terms of, I'll just stay on the ESG part for a while. So ESG is essentially more data. It's looking at issues that as investors we think are material, and materiality is a concept of what it can have a financial impact on a company. So one way to think about the quality of the management team, how good they are at figuring out the risks and opportunities in terms of certain investment options, is to look at how they're governing on ESG issues, because these are increasingly having a material impact. A lot of investors just use that as a data point. It doesn't change anything in terms of the companies they do or don't invest in. Some might overweight the better performing ESG companies and underweight the less, the laggards or the ones that aren't performing as well. But ultimately, then I'll describe a second step. You can also screen a portfolio based on certain criteria. So, for example, in our mutual funds, we screen out certain industries that we think just they're too onerous and they are too costly for society. So we do not invest in alcohol, tobacco, gambling, nuclear power, military weapons, civilian firearms, genetically modified organisms. So companies that are involved in that, we just say kind of right off the bat, no investment. We can talk fossil fuels are certainly in that category. We can kind of dig in deeper there. But what this gives you, even if you do screen, is a different list of companies in a portfolio than you had before. Mm-hmm. And for some people who do this type of investing, they might say, okay, I feel better at night. I can know that I'm investing in better companies. How the stock market works, going back to that, is that when companies want to raise money, they issue stock, and the company generates the revenue from this IPO or initial public offering. After that, investors just buy and sell between themselves on a secondary market. So the company's not even involved anymore. So the fact that impacts companies, whether you're invested or not invested, is a bit of a leap. So we think that the biggest way to have an impact is actually to engage with companies and try to improve their performance. And for us, we have an environmental focus to all of our advocacy and engagement. So the ESG factors, just so you know, they're kind of all across the board. Funds and companies can focus on different things. Mm-hmm. I'll share a few examples. So I mentioned we have an equity fund and we have an international fund. And both of those funds use a variety of criteria. There's actually 37 data points under the E, S, and G banner. And I'll just share a few with you. So the big buckets under the environment are climate change, natural. So I think we know a lot about that. That's emissions, carbon footprint, natural capital. This includes things like biodiversity and land use and water issues. Another pillar is pollution and waste. Things like toxic emissions, packaging. The last one under environment is environmental opportunities. So not just kind of trying to avoid the negative, but looking at the positive. Things like clean technology, green building, renewable energy. Under social, issues like human capital, product liability, which is kind of the safety of your services and products that you're offering, stakeholder communications, social opportunities. So are you providing, access to healthcare, things like that. And then the governance pillar, this, environment and social will kind of depend on the issues that are material will depend on the industry that you're in and the types of products or services that you're offering. Governance kind of affects companies across the board. The two pillars are corporate governance, so kind of board issues, compensation, ownership, accounting type things, or corporate behavior. So ethical practices, is there any corruption? How do they deal with tax issues? Those sorts of things. So that is a wide variety, but hopefully gives you a sense of kind of the breadth of issues that investors try to take into account.
Well, I think that's amazing that this kind of data point or measurements are being taken and are being factored in, and that there is such a thing as like Green Century Funds that is using it as like a like allowing criteria. I think that's wonderful. I wanted to ask in social, I know there's going to be a bunch to list, but where do labor standards fall under Green Centuries? And no judgment if it's not very high. I understand it's always a bit of a push and pull with, climate change or caring about, or maybe not always a push and pull, but it's climate change and caring about material conditions of the people living and working in those industries. Where do labor standards fall in that kind of like category for Green Century?
Definitely. They are right up there. So for us, they do need to have the combo of the E, S, and G. You can't so for example, with labor issues, Walmart is a good example because they have actually been pretty aggressive in adopting environmental standards for their buildings and packaging. And
that's good enough.
Like they've kind of driven some of these changes down the supply chain which help other industries just because of the, vast market share that they have. But they are not strong on labor issues, on pay. They're providing some healthcare, they're providing some education benefits. But for us overall, an example like that, you can't be great in one area, but really not good in another and get in. You need to have kind of a minimum across the board. And then, when we engage separately, it's kind of focused on environmental issues. So we want them to improve in that area, but they really need to kind of reach the bar in all three areas.
That's very cool. That's impressive. I was wondering, I want to just give a shout out to Molly Mae Brady, who's tuning in here. Hello, Molly. Thanks for joining us. I was wondering if you can give us maybe like at least one example of like what you mean by like helping companies to become more environmentally conscious or active. Like, what does that mean?
Yeah, totally. So this is where we engage with companies, and it's a big part of what we do. Like our strategy on the investment side is to avoid the worst companies out there, invest in the better companies, and then work to improve them. But essentially, there's no perfect 100% sustainable company in existence.
Right, sure.
So we really try to engage with companies all along the spectrum, whether they're at the higher end of that in terms of environmental performance, or they're kind of middle to lower end in terms of what we would be willing to invest in. So what it does is it's a great tool to make incremental change, kind of one company at a time, but it can often be very influential change. And a lot of tools are available to investors. I'll just share a few that we use, and we've got there's a lot of work involved in this. We have 3 full-time people on staff that work on this, in addition to our president who oversees it and is involved in some of these negotiations. But we can simply start a conversation with a company to educate them about what we see as their environmental and business risks from climate change issues, or other environmental issues. We can just encourage them to adopt greener policies and practices. And sometimes we're successful, sometimes they're like, oh, okay, we see that point. Yes, we'll engage. We'll, have like most relationships, some are in good faith. Others we realize are, just kind of lip service or some greenwashing. And in those cases, we can do something called filing a shareholder resolution or a shareholder proposal. And that is something that gets put on a company's proxy ballot. And that's something that all shareholders can vote on. So it's a way to weigh in on these issues. And I can share a couple examples. We had 3, we've probably filed dozens of shareholder proposals each year. It can often bring a company to the table and say, oh, you guys were kind of serious about that. What did you want to talk about again? And, we'll actually engage and, kind of work with us. Other times we try to come to, essentially our goal is real world, concrete, measurable change, some time-bound commitment from them to improve. If we can't get that far, then we will go forward and the resolution will go to a vote. If we can make progress, we can withdraw that, so we can just continue to work with them. We had 3 examples this year where it's kind of unprecedented to kind of have a majority vote over 50%. You only need a 3% vote in order to file the shareholder resolution again the following year. So these are pretty, unique in this space. But we had one with Procter & Gamble. We were engaging the company kind of parallel to a number of environmental campaigns that green groups have been putting forward to try to get the company to essentially stop cutting down old growth timber for use in their toilet paper.
Wow.
It's kind of unconscionable to even think about the issue. But 67% of shareholders voted in favor of that to try to get the company. And, these are non-binding. The company doesn't need to implement, even if it's a majority vote, but it is really a lot of high profile pressure on the company. The other 2 just quickly were a restaurant brand called Bloomin', which has changed like Long John Silver's, Outback Steakhouse. And we were asking them to look at ways kind of across the board to address climate change issues, from carbon emissions to deforestation in their supply chain. And that got a 76% vote.
Oh, wow.
And lastly, just a very large commodities company called Bunge. And they deal with palm oil and soy and other large agricultural commodities. And we were asking them to make a change to their no deforestation policy. And it gets kind of technical, but essentially they were kind of against it, eventually came around, and we were going to withdraw the resolution. But strangely, they said, you know what, we would like to publicly support this. So they put it on the ballot, and each resolution kind of has a pro or a statement from the investor, why we think you should vote for this, and then a management statement, which very often is against these resolutions. But in this case, they supported the resolution and recommended a vote for. So it got 98% of the vote, which is the highest on any deforestation issue by far.
Or probably any election ever.
Exactly.
That's impressive. That's very cool. That's really kind of unexpected, but that's just because I didn't think that companies would kowtow to something like that, but I guess that it's actually working. Democracy in the marketplace, if you will. When you have the shareholders, chiming in, that can be very powerful when people gather together and like, we want this to change, or we're selling you back our stocks and you're not going to get our money. It's one of the ways capitalism, which I hate that word, but actually can be effective.
Completely.
I wanted to go into it because I wanted to, I guess, keep it to a realistic perspective. So you said that, these votes are non-binding. And we're looking at an instance where it's not democracy, one person, one vote, but it's one share, one vote in this instance, correct? And with those shares, you're allowed to bring things to the floor, and then you can put them up for is it a resolution? Is that the right wording for that?
Yeah, it's put on the proxy ballot. So there's... On
the proxy ballot, okay.
Yeah, a handful of issues that management puts on the ballot, but then shareholders can, through a process that the SEC, the Securities and Exchange Commission regulates, investors can use this tool as well.
And as being the investment firm, and these stories that you've mentioned thus far, these are instances where the firm has shares and is making these advocation plays.
Yes, these are with companies that have made it into our portfolio. Kind of a technical side piece is that Green Century kind of uniquely has our own private investment account, so that we will engage with companies that won't pass the criteria and won't pass the screens to get into the funds on certain egregious issues that we feel need addressing, especially environmental issues.
I heard about one of these, Tyson Foods.
Yes.
Yeah, that was mentioned.
What happened?
Yeah, could you tell us just real quick, and I'm sorry if you don't know much about this, and maybe you didn't work on this case, but what happened with Tyson Foods?
Yeah, so they're an interesting example, and it's a company that over the years we've engaged on a few different issues. One of the issues a few years ago, I'm not sure particularly which one you're referencing, but one of them was trying to get companies to encourage more plant-based protein. We all know that eating meat has a significant environmental impact, from land use issues to water use. That's pretty significant. Mm-hmm. So we engaged with this company soon after they took a stake in Beyond Meat, which, as we know, is one of these plant-based proteins. I don't have the exact numbers with me, but this part of the market, the food market, has pretty significant growth potential. So from us, it's not only an environmental issue, but it's also, are you taking advantage of the opportunities to grow within the food space that is more sustainable, that is more environmentally sound?
Excellent.
We've also worked with them on some gestation crate issues, trying to make sure that, pregnant pork essentially has freedom to move and roam. So some animal welfare issues as well.
Yeah,
that's amazing.
I'm picking this up from the video. Jared Fernandez was being interviewed on a show. AIO fee only financial advisors was the channel. And I'll put that in the description eventually so that people can check that one out, because it's a neat story. And I think they ended up taking like 5% of that stock So yeah, they took it pretty serious that they need to diversify and maybe stop mistreating animals to that degree. It's terrible, some of the factory farming that Tyson Food participates in.
Exactly.
But
And
wow.
I'll just share one other quick example, of an engagement that I was personally involved with that was with a company that didn't make it into our portfolios, but we put a shareholder resolution on the ballot at Chevron several years ago, asking the company to stop making any political contributions.
Cool.
So we're kind of willing to like put the stake in the ground to say, this is where we want to go. As we know, Citizens United kind of led us in the very opposite direction of that. So that was a whole fascinating experience in itself.
Y'all were ahead of that one. Chevron's like trying to hold their own company court right now. Like they are just wiling out. Chevron needs to be pulled in, reined in big time. So, hey, I'm glad you guys were there poking them earlier on. Good on you.
Exactly. And it was, just a kind of surreal experience to do the whole thing. But it's one of these examples where we kind of knew in advance we were unlikely to get a high vote, but we did a press conference right outside the headquarters. The sign was in the background. Friends of the Earth were there. New York City was there addressing other issues with the company. So we can work in coalition with other investors who have similar concerns to kind of raise the profile, get press, just really try to find different ways to bring pressure to make positive change.
Excellent.
Yeah, that's amazing. I mean, seriously, the more you tell us about this, the more impressed I become. So speaking of like coalitions, are you getting a lot of interest from other areas of Wall Street, like considering like, hey, this is pretty cool, tell us more about what you're doing, because like I said, like before the show, I think everything is going more and more green all the time because of public outrage and just necessity, really. That's why this is also another very interesting opportunity for people to invest in something that is going to, looks like the market, just via the market itself, is going to provide a great deal of fruit for the investor. So are you getting anybody else from Wall Street, knocking on your door, asking what you're doing, that kind of thing? Are you getting any pushback from people at Wall Street? What do you mean ethics in investing? That's crazy, a hippie. Like, anything like that? Or like
Totally. It's kind of both sides of the coin, I would actually say. As our president, Leslie Samuelwich, kind of describes, when the fossil fuel divestment movement started, this was about 10 years ago, we were like, wow, like this is exactly what we need. And we are exactly positioned to be in this space. We had to tweak one of our portfolios to make it fully fossil free, but it was a small change and something that we felt we were engaging with a few gas companies at the end. But in the end, we realized, like, okay, what's this going to do? Try to make the greenest gas company out there? Like, That's not really our end as environmentalists. So it was a no-brainer to kind of quickly and fully go fossil fuel free. And we've never looked back. We've opened up a new fund since then. It was easily fossil fuel free. So from our perspective and orientation, this is exactly where we wanted to go. She described it, kind of internally to us staff as, this is a moment. I'm not sure if it will turn into a movement, because we could pretty quickly see, like, it's not that difficult to go fossil free. Back in, I would say maybe the 1980s, the energy sector was a larger part of the overall economy. And for example, in the S&P 500, it was, anywhere around 10 to 12% of that fund. Now it's down to 3 to 4%. It's just a different, like, technology companies, financial companies are much bigger sectors nowadays. So she thought pretty quickly, especially the funds in kind of the ESG, socially responsible investing space, would quickly jump in and go fully fossil free. Most funds, families have come up with one or two products. Even the largest firms, BlackRock, JP Morgan, State Street, Vanguard, they all have, certainly a few products in the space, but they're very token. they're very minimal compared to their overall portfolios.
Sure.
It's just one or two that they're doing. And so from our perspective, we're like, and some of them just literally change the name and add a screen or two to kind of be in this space, but they would still invest in companies like BlackRock or Walmart and other companies that you might not want in the portfolio overall. Right. So it's kind of surprising to us that it hasn't been more, but certainly the whole ESG SRI space continues to grow. We have kind of an industry trade group called the Social Investment Forum. The website is USSIF for Social Investment Forum. .org, and they do a trends report every 2 years. And in the 2020 report, 1 out of every $3 that was professionally managed or invested in the US had an environmental, social, and governance either screen or the companies were actively engaging on these ESG issues. And that equated to about $17 trillion. So we're seeing significant interest from individuals, financial advisors who do want to align their portfolios more with their values every day. So there's, significant interest out there.
Could you say that website one more time?
Yes, US for like our country, and then SIF, Sam, Illinois, Frank.org.
Got it.
And they actually have, I wanted to point out one of the resources, they have a mutual fund chart or mutual fund center, I forget what they call, but it lists a variety of funds that you can sort and mix and match and see what the screening criteria are. Yep, that's the website. So that's a great resource. Specifically, one other resource I wanted to make sure to mention was one called fossilfreefunds.org.
Okay.
And this is hosted by a nonprofit group called As You Sow. And they work with investors to do a lot of this advocacy and engagement on their behalf. But you can put in the ticker symbol, which is a 5-letter alpha code that each mutual fund has, and it will give you a score and kind of the breakdown of if this mutual fund has any exposure to fossil fuels. And so it's a great way to kind of see what you already own, know what's in there, and also if you're looking for new fossil-free options, kind of be able to confirm that as well.
Excellent.
Is this having the avoidance of fossil fuel companies completely? Is that having any sort of effects on politics? Is it having any sort of economic effects on the fossil fuel industry that in turn has effects on politics?
Definitely. So we kind of talk about several reasons why investors might want to be divested from fossil fuels. Just high level, we've talked about some of these. There's potential financial risks. The energy sector is among the most volatile. It's been among the worst performing over the last 10 years. This industry has super high capital expenditures. There's risk of large disasters. We all know about the Exxon Valdez, the Brightwater Horizons explosion. So there's the financial aspect. It allows people to better align their portfolios with their values if they care about these environmental values. Mm-hmm. A big part of it is from the kind of influencing public policy part of it and trying to take away fossil fuel companies' social license to operate as a way to diminish their clout, their influence on public policy. And we think this is really important because, it feels really good to take individual action, to recycle, to drive an electric vehicle, to put solar panels on our house. But this is such a critical challenge to address climate change that we need to get to scale quickly. Sure. And demand urgent action. Businesses certainly play a big role, but we need government to step up their policies and regulations to urgently and collectively bring solutions to the scale necessary to make meaningful change. So if, as I mentioned before, if you just sell your shares, if you're successful at that, somebody else has bought them and they're still out there and somebody owns them. And if you stay silent about it, it's not doing anything. So we really try, as part of the fossil fuel divestment movement, to be vocal, to be public, as a way to give cover, as well as incentive and motivate our public officials to really take the steps necessary to have these big, bold legislation that we need. We're crossing our fingers now. Maybe we will make progress in the next couple months. We'll see how that goes. But that's certainly one of the biggest reasons to be part of this divestment movement and to publicly join.
Very cool. Do you mind if I ask one more question real quick, Calvin?
Go ahead.
Concerning all this, are you getting any pushback from the fossil fuel industry or any other type of non-environmentally friendly industries that are like, hey, what are you doing?
It's interesting. I mentioned, kind of early on that moment versus movement, kind of limbo, where were we? And some of the, most direct feedback that we got were from some of our colleagues in this space and competitor firms that we thought were quickly going to adopt this. We realized they either weren't there politically or weren't willing to take those steps, and were kind of pushing back on us to, come up with all sorts of reasons why this is, not good for investors, and, essentially a lot of paper tigers out there that we just said, okay, great, you do your thing. We are full steam ahead. We kind of had no reservations about this. Another big part of divesting is it frees up investment capital to reinvest in clean and sustainable solutions. Mm-hmm. It gives investors the opportunity to invest in more solutions-oriented companies, accelerate change, and kind of move away from the legacy system that threatens our way of life on the planet, to transition to a greener economy. So all sorts of industries, I could share some examples, but we were surprised by the pushback, kind of closer to home. I'll describe it as, rather than the broader fossil fuel industry. Right. I mean, they're getting hammered, rightfully so, for a lot of things. I think it was the Los Angeles Times that did a lot of research and a series of articles that these companies knew the impacts of potential impacts of climate change decades ago and hid it, didn't mention it, lied about it. But internally, there's memos they found that they understood potential sea level rise to the point where they were building their offshore oil rig platforms higher to account for it. And, I don't know if that's a smoking gun, but it sounds like one.
Well, it's certainly, I don't know about smoking gun, but it's definitely, it's at least a little bit incriminating. Wow.
And, states are suing them now. New York City, I think our Washington, I'm out in Seattle, our Washington State, Attorney General has joined that as well. There's campaigns, they knew, they lied. And we've all seen their ads. The greenwashing is kind of ridiculous. It's heartwarming, but it talks about their algae and their clean technology and the green jobs that they're generating. And these are minuscule parts of their business lines. So It's a little disingenuous, to say the least.
At least.
Well said. Well said. So I'm curious when it comes to doing some advocacy. As somebody who, assuming that they have some savings with the firm, let's say we want to tell a company to stop using single-use plastics and stop putting the burden of recycling onto the public. you handle the recycling if you want to use single-use plastics, but you really should be moving to bulk container redistribution where people can refill containers. There's no need for me to buy another 2-liter bottle from Coke or from Pepsi when I already have one, or I already have a better one that's a metal container that I don't have to worry about plastics. So how would we go about applying that pressure and getting that company to recognize that push through this means? So we can't do it democratically quite yet. We just don't have the organization and the amount of people elected necessary. So let's try it through the $1, one vote, one share, one vote method. Walk us through that process. And maybe you guys have already done something similar.
Yeah, definitely. This is a great example. And I would say that it is a pretty heavy lift for an individual investor to go through this. It's a lot of kind of navigating the SEC, the Securities Exchange and Commission regulations, 14A8 rule, and on and on. And
so I should have asked, let's say you guys took that initiative on.
Exactly. So I would just say this sounds like a shameless plug, but if you look for, certainly we do it at Green Century, but other firms in the space do this type of advocacy. I would say, we're among the biggest. We do it in-house. We're focused on environmental issues. So we're a great place to come join us in this effort, but just, try to join in others who are doing it. And this issue of single-use plastic is one that we have started to address actually this year. We work in coalition with our environmental nonprofit owners, and this is an issue that they have been working on for a while in their No Waste campaign. This was a great one for us. What we try to do is look for environmental issues where company policies and changes to companies' actions can really make a difference. And certainly packaging is a huge part of this. So we had a few great engagements this year, kind of a variety of them. We worked with Coca-Cola, and we actually got them to commit to reducing their use of virgin or new plastic by 3 million metric tons. And that's a way to just encourage the use of recycled plastic and a way to get that mechanism kind of up and going and supported. That translates to about 200,000 plastic bottles a minute for a year. So, a good start, a lot more to do with that company. Mattel was another company we engaged with. They are a plastic toy company or a toy company.
Right.
They are, I think toys are among the most, if not the most plastic intensive, not only because of the packaging, but so many toys are just made of plastic. That was a really collaborative engagement. They wanted to improve. Hasbro, one of their competitors, had a really good policy. So they worked with us, said, what's best practice? How can we do better? And so they agreed to create a plastic reduction policy. A couple other ones, we were not as successful with Amazon. They are notoriously kind of difficult to engage with. They have tons of packaging, as we know. It's not all plastic, but certainly a fair amount of it is. So we were not able to reach kind of a commitment or engage with them very much at all. So we did file a shareholder resolution that did go to a vote. It received 36% of the vote, which is actually the highest support for an environmental issue at Amazon, surprisingly. We also calculated it with independent shares, so without Jeff Bezos, and it would have been 44% of the vote. But then lastly, we engaged with Target, and on their own private label brand, they agreed to have a policy to reduce their plastic packaging there as well. So kind of a variety of engagements, but as you mentioned, kind of the nonprofit group that is one of our owners says nothing you use for a few minutes should pollute the environment for hundreds of years. Right. And that's exactly an issue where companies can make a difference, and certainly investors play a big role in that.
Can we imagine or role play just a little bit further? Let's say that resolution at Amazon did pass with a majority, and now we come up to an instance where I assume Amazon are going to be awful individuals with horrible ethics as they usually are, and they're going to say, hey, that's non-binding. What happens at that point? How can shareholders, or how could even the public join in and apply pressure, and can there be a better ending to that story than Amazon just goes like, meh, we're just going to keep being terrible?
Right. Well, it's up to us as investors to continue to put the pressure on. And as I mentioned, we work in coalition with other groups. A couple things about that. We have worked with Amazon on other issues that did not get high votes. One was food waste reduction. We had engaged with Whole Foods the prior year, and then Amazon bought the company. And so we tried to engage with them. We did not make much progress, but we did get 2 articles on Bloomberg about this issue, which is a high-profile site, really trying to bring attention to it. Another kind of example of this, there's a group I mentioned, As You Sow, that we collaborate with on a number of these plastic pollution reduction engagements, and they have consistently engaged with Starbucks to try to make their cups recyclable. I've attended the Starbucks annual meeting here in Seattle. They have this kind of monster that they bring out outside made of plastic bags that just looks like the grossest, most horrible thing ever. And they consistently parade it around in front of the executives, all the shareholders and employees that are going to that meeting. And every year they raise that issue. The company is making incremental change, but I have to imagine that there would be no change without this continued sustained pressure on these issues.
Sure. Yeah.
Right.
No, that's very cool. I like it's Seattle, Portland, that I could see those people doing that kind of thing. We only got about 9 minutes left, so I want to make sure that listeners understand how they can actually get involved in this Green Century Funds. Can anybody? Do you have to have a minimum amount of cash to start an investment there? I mean, how do people approach it?
Yeah. For us, and most funds, it's the minimum can vary. For us, it's $1,000 for a retirement account. It's $2,500 for a non-retirement account. But I will also maybe talk about kind of the way most people invest is through retirement plans. So you might have access to this through work, or you might have one of these IRAs, individual retirement accounts. They're sometimes called Roth IRAs or traditional IRAs. Through work, they're sometimes called pension plans or 401ks or 403bs if it's a nonprofit or a government agency. So another alphabet soup, but I would say one of the first steps is just review the investment options. When you sign up, or when you start working there, you might get a list. So again, that fossilfreefunds.org website could allow you to simply put the ticker symbol in and just kind of see, you may already have access to some pretty good options there. If not, you can ask work. Who's responsible for the investment choices in the plan. HR is a good place to start. They may work with a external financial advisor or consultant that they could put you in touch with. Kind of separately, you could research some green investment options. I mentioned the USSIF.org for the Social Investment Forum group that has that mutual fund chart. Green America is another group that kind of has some good green investment options. It's a great idea to kind of figure out if you have other employees, colleagues who are interested, kind of rally support, get other employees involved, create a working group, have some brown bag lunches, just show some support and investment interest in these options. And then it's advocating for the funds, pitch whoever the decision makers are on why these are good options. And I would just recommend be persistent. These changes can take time, but it's a case where the obstacles can be overcome, and there's plenty of appropriate solutions out there that exist, kind of no matter what their criteria are, which might be pretty, limiting or strict. But all of this does allow people to invest green. And then you can spread the word. And I think good adoption of these options within a retirement plan will help if there's some change to the plan, or if new people come on board who are managing it. Just kind of shows, oh yeah, they definitely want an option like this. So retirement plans are kind of sometimes the entry point for people in investing. So those are some tips there to get some good choices.
Okay, great. We got about 5 minutes left here. So just real quick, and I'm not trying to be cute and say this just because it's a Green Party show, but do you guys come out for Green Party candidates or any sort of progressive Democratic candidates? I mean, obviously you're very politically active in your own right. Is that a thing that goes through your offices at all, or is it just sort of water cooler talk?
Yeah, we don't publicly support candidates.
Okay.
The nonprofit groups, I think we're certainly bipartisan. We try to work with people as long as they are solution oriented.
Sure. That makes sense.
We certainly know that kind of limits the number of people we can work with. But I think on extreme occasion, they will, for instance, I think in the last election, supported a candidate in Massachusetts that, we had just thought was the better candidate. So in certain circumstances, they certainly will do that. Okay. And we've got actually so the public interest research groups are the state-based organizations, a subset of which founded Green Century. The woman who's the political director of the Public Interest Network, Wendy Wentland, is actually one of our board members at Green Century.
Yeah.
So, we certainly have ownership representation there, which is not uncommon. But in our case, we just think it's really helpful and informs the work that we do. Very cool.
Very cool. Do you guys deal with cryptocurrency at all?
We do not.
Okay.
I was just actually, I was just filling out a questionnaire that asks, do we invest in this? We don't yet. I think it's certainly growing. There's more options out there. So, kind of like we get a lot of questions about cannabis. Are we investing in that?
Are you?
Not yet. But again, it's these, we invest in public companies that, to get to that stage, you need to be a certain size. And I would just say these are emerging industries. So, as they grow and as they become less volatile, that's when our portfolio managers start to say, oh, that would be a great option because, I do imagine that both have pretty good potential growth opportunities.
Oh, absolutely. Yeah, for sure.
Yeah.
Calvin?
Yeah, I love learning about all of this. I think, when we're talking about where to invest money, I think this is just such a great option for people. And I'm so glad that they, could learn about this and you could come on and talk about it. Outside of direct democracy and electoralism, this is just another great avenue where if you have some investment capital, you can know that it's being put towards a good thing. I was lastly curious, do you guys or does the firm do any work with ESOPs, unions, or worker cooperatives?
We do kind of in coalition with some of these groups I mentioned. So some of the groups that we kind of collaborate with are pretty specific. There's a European group called FAIRR, FAIRR, that stands for Farm Animal Investment Risk and Return. So, that's a pretty specific subset of issues. But there are some broader ones. There's a Boston-based group called Ceres that has the Investor Network on Climate Risk, that has a number of labor groups involved. The Interfaith Center on Corporate Responsibility, ICCR, has certain representation from a wide variety of not only investment firms, but nonprofits and unions. So we try to work, a lot of groups have a particular issue that they are kind of have more in-depth knowledge on and are experts on. So it's a way in these coalitions to really build off of other people's strengths and for us to share the work that we do and to get them to kind of jump on board, say, oh, that's great. How can we help? So we do that on a number of other issues as well. And I think that's probably the closest collaboration we can get with organizations like that.
Gotcha. Okay.
Wow. Thank you so much for all this.
Yeah, absolutely. As usual, I have many more questions for you. So we're just going to have you back on the show.
Fantastic.
But we are at the end of our hour. That went by really fast. That's because I was just like glued to what you were saying. It was really interesting stuff. This is very impressive, Erin. Thank you very much for doing what you do and coming here on the show to tell the viewers about it, because this is I think this is pretty powerful. This sounds like a good opportunity for a lot of people to invest their hard-earned money in something they believe in, for sure, instead of just throwing it to the wolves and see who wins. That's very cool.
Thank you so much for having me.
Absolutely. You take care of yourself, and tell Seattle I said hello. Ladies and gentlemen, thank you again for tuning into the Illinois Green Party series. I am your host, David Rych, and with my co-host, Calvin Tomaschko. Calvin, great show.
This was so much fun and such an interesting topic. I got to learn so much. So, I mean, just being a student here, I had a blast.
Yes, very much so. Erin Gray, thank you again. It is called Green Century Funds. Just look it up, Google it, and .com, and you will. It's an impressive website. It's got lots of information about it, and it's very cool. So thank you again, Erin, for everything you do.
Thank you.
Till next time, everybody. Be good. Be green.